Hi everyone, I'm Chia and I'd like to present to you today's topic of course behaviors. So this is going to be applicable for some of those students who are doing management accounting at degree level and some of those who are doing the ACCA. So let's begin. Okay, we'll start by looking at what's the purpose of analyzing course and the different types of courses. Following that, the methods that we use to analyze courses, which is the high-low method, scatter graph, and the linear regression method. So why do we want to analyze courses? What's the purpose of analyzing course? Well, a few of the reasons. One is that to actually assess what's the relationship between course and activity, right? What's the relationship between the two? Especially if, let's say, for example, rental and salary. And what else? Raw materials. How do these courses come about? What actually influence these courses to change or vary? So let's look at an example like output. Typically in a factory where there are goods being produced, if there is an increase in output, what would be the impact on costs? Would costs increase? Now chances are when you increase your production, costs would increase. And this is mainly because there are more materials being incurred, being purchased, and of course labor costs as well. So generally when there is more output, there is also more cost. Of course, we also believe that the reverse is also true, where if you reduce the amount of output, it is possible to reduce costs. Now the same applies for hours. If there are less hours worked, would costs be higher? If there are less hours worked, we believe that costs should also be lower. Of course, the reverse is true, where if people work more hours, then there are more costs, right? Which is why it's important to analyze costs. Now, going on is the following item of why we need to analyze costs, because by knowing what your costs are, ultimately that enables you to assess what's the impact of costs on sales. Would sales be higher, or would sales be affected by your higher cost or lower cost? Obviously, we all understand that if costs are lower, that would have an impact on increasing profits. The reverse is also true, where if there are more costs, then profits will tend to be depressed. Alright, what are the different types of costs? One of the common examples that of costs is the variable costs. Alright, variable costs is basically a group of costs where such costs tend to vary in relationship to or with an activity level. Alright, so which means that it could be an example like where there are more orders of materials, that results in more material costs. Or otherwise, it could be that there are more hours of work by your direct labor, and that results in more costs. Okay? Now, variable costs have a relationship with what you call that, with changes in activity level, but that is only true for a certain relevant range. Now if you look at my case of this chart here, you might find that the material cost has a relationship with the materials here, right? Where you order more, you find that material costs would increase. But that's only true for that certain relevant range. Why? Because as you exceed a certain amount of orders, there might be discounts being given, so that results in lower prices. But of course, if you order too much from the same supplier, he might not have enough to supply your business, and therefore you might have to go to another supplier, and that may increase your per kilogram or per unit material cost instead. So therefore we say that material costs are only variable costs only over a relevant range. If you look on per unit basis, that's also true, where per unit of raw material that you order should not change in terms of the cost. Okay, every unit that you order, the cost should remain the same. Right? It is only when you order beyond that certain level, right, where the cost per raw material may start to vary for many reasons, and one of which could be because of discounts, or could be because of shortages, prices will increase. Right? One more is your fixed costs. What are fixed costs? Fixed costs are costs that do not vary with changes in activity level. So this could be examples like rental, where total rental per month doesn't change because even if you produce more or less, right, changes in activity level will not affect rental costs. In fact, rental costs is likely to increase if you happen to rent another location, another factory. So rental costs may jump instead. And of course, if you rent one more location, rental costs jump even further. Alright. So in such a case, if you look beyond that relevant range, rental cost can be a step cost. Okay. So that's rental. So any other examples of fixed costs in this case could be supervisor salary. It could also be rent, repair and maintenance. Of course, repair and maintenance could be debatable because it depends on the nature of the business. Some businesses may have repair and maintenance regardless of the volume of activity, right? And whereas others, where if as activity level increase, the repair and maintenance rates also increase. Okay, if you look at the per unit fixed costs, you find that as you increase the quantity of production, you find that whether it's quantity production or activity level, you find that as you increase the activity level, the average costs per unit will tend to be depressed. Alright, good. So other types of costs, semi-variable costs. Semi-variable cost is one which has the features of both a variable and a fixed cost. So this is a typical example of a semi-variable cost, right? Especially in the case of a factory where, regardless of the quantity that you produce, right, there is always a fixed element. Why? Because even if you don't produce any, there are still fixed costs to be paid. But as you produce more, the amount of variable costs also start to increase. That's why you notice, right, semi-variable cost has elements of both variable and fixed. Now, handphone bill is also another example where, in some countries, people have phone subscription plans, and these phone subscription plans come with a certain number of free call time. So the moment you exceed that free call time in a month, you have to pay extra for every additional minute that you call out, right? So that's semi-variable cost. Okay, one more is the curvilinear cost. Curvilinear cost basically quite applicable for certain items like scarce materials. Basically, what it means is that there is a curved relationship between cost and activity level, especially for scarce materials. Why? Because the more you purchase, the higher the purchase price because of shortages. Okay, now, and why do we need to analyze all these cost behaviors? Because if you're able to understand how costs behave, you will be able to assess what happens if there is higher production levels. How would that affect your costs? Would your costs increase at a faster rate, or would your costs increase at a slower rate as you produce more? And this is useful because through this, you are able to budget and foresee whether increases in quantity of sale will result in higher profits. Right. Now, so some examples here for you to see. Okay. So, like in a factory, you might produce certain quantities over a period of time, but then the costs, okay, if assuming that they increase or change in a linear fashion, okay, you find that there should be a straight line relationship. But you notice that even at the zero quantity of production, there is still costs being incurred. That could be the fixed costs, right? Now, one more is another case of semi-variable cost. You notice that in this case, notice that the points don't exactly form a straight line, right? And this line is thus known as the line of best fit. Okay, how would this be the case? Reason could be because of like fluctuations in terms of production costs, like material, labor rates may be a bit different, right? Or that people may take more time to produce because of learning curve. So many reasons why costs may not change in a straight line relationship with the quantity of production or the activity level. Okay, now how do we analyze what is the cost per unit? Okay, how do we analyze how fast or to what extent would costs change for every additional increase in activity level? Now, one method that we could use is the high-low method. High-low method is an interesting method because what it does is that you take the highest cost minus the lowest cost divided by highest activity minus the lowest activity. Now, using this formula, you are able to determine what is the variable cost per activity. the method here is very simple because it enables you to get the result that, without a lot of complicated steps. Straightforward. Okay, it assumes that between the cost and the activity level there is a linear relationship, which may not be the case, okay, depending on what context you're looking at. Okay, next is how do we actually apply high-low method on, let's say, this example here. Okay, to apply on the example, quite straightforward. Okay, what you need to do, let me demonstrate. Okay, the steps are extremely straightforward. So take the highest cost, which is 195, minus the lowest cost, divided by highest activity level 750 minus against the lowest activity, which is 0, divide, and that gives you your variable cost per unit. Got it? So quite simple. 195 minus 100, and then you divide that by 750. That gives you an answer of 13 cents, 0.13, or you can say that it's 12.7 cents. It's the same. Now, so this method is very convenient, okay, straightforward to calculate. Okay, now it also makes a very simplistic assumption of taking out all these points not lying on this straight line. Okay, all these outlying values are all ignored now. Okay, so not too difficult to apply the high-low method. Now we also could use the scatter graph to analyze causes. This is fairly straightforward. Basically, two variables are identified and they are plotted onto the graph. This immediately shows whether there's a relationship between two variables. Of course, if there isn't any thing that you can see on the graph, it means that probably there is no relationship. Okay, so the scatter graph, which was what we saw just now, okay, with this series of points dotted all over, right, and then with a line of best fit. Through the scatter graph, you are able to forecast what happens if you want to produce 800. Okay, how do you know how much you need to spend to produce 800? By extending the line of best fit, you would be able to predict what would be the causes, if you make 800. What would be the causes if you produce 900, for instance. Now, the line of best fit method is a bit simplistic. It assumes again also that there is a straight line relationship. Not necessarily the case all the time. Okay. Okay, and we go on to one more method known as the linear regression method. Linear regression method is very scientific. Basically, it tries to, again, same thing, it tries to assess the relationship between two variables. Okay, it works also on this assumption that there is a linear relationship between two variables, and honestly there is no linear relationship in all cases. Okay, so it really depends on the context. Like if you look at my example here, do you think that there is a linear relationship between cost and units of output? Of course there is, because you can see that the line of best fit is quite clear, a straight line, and then it seems to connect all the points. According to linear regression, okay, linear regression can be performed on Excel or it can be performed manually. So in this case I used Excel, and then Excel gave a result that according to linear regression, the cost per unit of output would be 12.6 cents or 13 cents for that matter. Right. However, if you refer to high-low method, the result is a bit different. It's 12.6 or 12.7 cents. Right. So now, of course, you find that these two looks very much the same and they seem to give you the same results. Now, however, you will find that the difference between the two is a little bit more obvious in the second example. Okay, why? Because in the second example, we assume that what happens if the last month you spend 400 instead of the previous 195. Now, if it's 400, it means that on the scatter graph, the last point will be lying out. Okay, it would be an extreme point. The high-low method would determine that the cost per unit will be 40 cents. Okay, how do I know that it's 40 cents? Okay, quite simple. Highest cost minus lowest cost divided by highest activity minus the lowest activity. So that's how we determine that the high-low method gives us 40 cents per unit. But high-low method ignores the extreme values like these. Okay, it only considers only the highest and the lowest point here. Highest and lowest point here. If we use linear regression, your result would instead be 0.285 or 258. Now the linear regression method, why it looks so different is that because it takes into consideration all these other points here, right, in determining what is the what you call that, the cost per unit. So you notice that the cost per unit for linear regression is significantly lower compared with high-low. Linear regression tells you 25.87 cents per unit, whereas high-low method gives you 40 cents. Okay, significantly different. So why do we need to know all these cost behaviors? Because by understanding cost behavior, it helps you in preparing a budget and forecast your profits. And the limitation, however, of those methods that we can use to analyze cost behavior is many. Okay, like the high-low method is not the best method because it ignores extreme values, right? And of course, on the upside is that high-low method is easy to apply. As for scatter graph, well, it's not the bad method. Okay, the downside about scatter graph is that it depends on your line of best fit, how accurate it's drawn. It also assumes that there is a linear relationship, which may not be true. Now, lastly, we could use linear regression, which is the more preferred way, because linear regression takes into account all points, all the x values and all the y values. Okay, so it gives you the most accurate or most reliable results. Okay, in fact, we can also go one more level to apply multiple regression. But multiple regression is not covered in this video. But if you want me to cover that, drop me a mail. We could cover that. Okay, so that's a very quick preview of the entire topic of cost and cost behavior, right? And if you want to watch more, you can visit my channel at www.youtube.com/231wildy. Okay, thank you for watching and hope that you have a great day.